Let's take a look at point number 5, milestone number 5 now. This was a massive achievement for India because India's all-time FDI inflows crossed 1 trillion US dollars.
You know, Megha, we used to calculate FDI. So there are two kinds of investments that come in, foreign investments that come to India. One is called FII, which is foreign institutional investment. This is what's going into your stock markets and financial instruments and your companies and the monies that companies raise from capital markets and investors abroad. The problem with FIIs is that a percentage of them can literally be sold overnight and moved out of the country depending on how the winds are flowing economically. Foreign direct investment is a lot different. That is in power projects, in road projects, in port projects, in major infrastructure building where the investment payoff period may be 10 years, it might be 20 years, it might be 25 years. So foreign direct investment can't pack up and leave. It is invested into the growth and development of India to pay a dividend to the investees over a period of time. Now, 2-3 decades ago, getting $10-15 billion a year of FDI was a marked achievement. That became 30-40 billion. So we are looking at a figure of all-time FDI, which means over the course of our economic history in the last 20-30 years, we have now received more than $1 trillion of people from all over the world investing in capital asset formation in this country. So now you look at the overall figure, 7% GDP growth, fastest growing economy in the world. Okay, Jayajit was just mentioning we've already become the number 5th economy, which means we overtook the UK. Most likely we are already, if not or will shortly, become the 4th largest, overtaking Germany, which means in terms of sheer economic size, only Japan, China and the United States of America are left. If you put in the figures of the forex reserves which I just mentioned, so forex reserve at about $700 billion, they go up and down, so they're a bit below that, but we peaked 2 months ago at $700 billion. That covers 11 months, so almost 1 year of import bills for this country. So let's assume that India did not have a single dollar of any exports, they just stopped tomorrow for some reason. You would still have enough money in your bank, in the RBI, to cover your import bill for the next 1 year. And more importantly, that covers 96% of external debt. So for every penny that India owes for monies we have borrowed from abroad, we have that money in the bank. It's almost on a one-on-one basis. Then of course you have FDI coming in, which is also contributes to your forex, contributes to your GDP growth, and it puts you in a picture of where we are headed.